Good morning. I'm Jenny Ray LaRue, and I'm here with my colleague Naman Mian. We are at Market Outsiders on this Wednesday, May 28th, and today is my mom's birthday. It's a very happy day because my mom is awesome. So happy birthday, Mom. I don't think she's listening, but we're really excited that you're here joining us, and we're excited to kick off the conversation today. Naman, how you doing? You shaking off any cobwebs this morning?
I'm doing great. Wait, who's our one listener if it's not your mom?
Naman, that's so mean. It's my dad. Okay,
It's
but whatever.
okay. I was
Yeah.
gonna say it's not my mom.
Yeah. Are you sure? I don't know. Your mom's pretty awesome too.
She is. I'm doing well. I know, big news in the MC offices this week has just been the news that broke yesterday about, headcount reduction at McKinsey, which all of us kind of saw through and thought was incredibly misleading, the headline. Do you want to break that down for us? I know I've got thoughts, but I'll give you the floor first.
Yeah, I mean, like I think we should do more than break it down. I think we should rip it apart. I couldn't believe this when I saw this article, and so I want to pull it up for y'all. And I think that this is going to be really insightful when we're talking through it because when we saw the headlines, literally we started texting each other. Did you see what happened with McKinsey? And this isn't trending news today. And then when we kind of got into it, not very far either, we realized that there's nothing there. This is a nothing burger. And we are always interested in what's happening kind of in the space and in kind of, each of the key pieces. But this was the headline. It was from the Financial Express, which, easily could be conflated as something else, not Financial Express necessarily.
Yeah,
Um,
so it was the Financial Times that broke the news.
well, okay, where I didn't find the Financial Times article. Do
So it
you want
was
to
it
pull that?
was it was an FT exclusive. It's gonna make me log into my subscriber account to pull it up. So I'll let you pull up the aggregated version or the syndicated version.
Okay. No,
But
the one that I couldn't find it anywhere on the major pubs. So I don't know if it came down since yesterday.
mm,
But I was like, all right, this is the one that I found. Right, layoff news on May 28th, right? Layoffs. McKinsey cuts 10% of global workforce amid industry slowdown. This is Financial Express. And so this is focused on Asian markets. And and then this is how it reads, right? So first of all, the fact that it says layoffs, I think is incredibly misleading because when I see a headline that says layoffs, I think yesterday 10% of McKinsey got an email. And my first thought, Naman, when the text started going around our office about these cuts was why would McKinsey lay people off on a Tuesday? Like that's just not a thing that McKinsey usually does.
hmm hmm
McKinsey's a classy operator. They lay people off on Friday, just like everybody else should. And so it was like, I was imagining there was this email that went out that was like, you have 30 minutes, clear your desk, or like you're locked out of returning to office. But that's actually not at all what happened here in the story. So it says the cuts come as the consulting industry grapples with slowing revenue growth following a pandemic era boom. Okay, so slowing revenue growth and declining revenue are two different things. I have to teach about this in my seminars at top business school programs because a lot of people do not understand the difference and they think that they're the same thing. When I say that your growth is slowing, it means that it was 80% and now it's 70%. Or it could mean that it was 5% and now it's 4%, but it is still growing. You are still growing. Most businesses go through growth curve changes over time. The growth curve steepens, the growth curve slows. What this article insinuates is that McKinsey's growth is negative, which it's not. In fact, McKinsey is still growing. They simply are growing way slower than they were in the pandemic, which is true at large of the consulting industry. And it's driven by some changes, not just with pandemic era layoffs, but some changes in government and also increased competitions from the boutiques. We're seeing the battle of the boutiques really kind of grappling at share. For a while, boutiques were ankle biters for MBB, and now they're really taking some serious business from MBB as well. So then it says during the 5 years leading to 2023, McKinsey's workforce had grown by nearly two-thirds as it expanded into project implementation and digital services. So what this is also insinuating that project implementation and digital services are either going away or something else is wrong with them. And I do think we should dive into that because McKinsey has expanded in what they offer. They are the largest of the top three by headcount. And one of the ways that they did that was by growing into longer term but lower margin projects. And that is really what those implementations are. So I'll keep going down the article, but I don't know if this is what you saw in the Financial Times. Like I said, I couldn't find it. I couldn't find that article, and so this is the best that I was able to come up with from yesterday, like late last night.
There's nothing materially different in this article than what I saw in the Financial Times yesterday, and my reaction was exactly the same. Just a couple of points here. I think comparing any company's growth or headcount to pandemic era is almost a false comparison. One of the things that we've been writing about for months is how the real comparison to gauge the strength of the consulting industry should be between now and 2019, right? Like the kind of our last pre-pandemic reading, because the pandemic was just such a sugar high for consulting and many other industries because of like the spigot of government spending that was opened, because of the mass uncertainty, right? Like a lot of demand was pulled forward, right? Into the
Mhm.
pandemic. And so what I do when I look at McKinsey, when I look at the consulting industry, is I think it's important to know, okay, what was growth during the pandemic and then what's the growth been post-pandemic, but I also go back to 2019. And when you look back at 2019 and compare it to today, McKinsey's headcount is still higher. Their revenue growth is still higher in spite of increased competition. And so I think it also matters what era you're comparing this era to. And I don't think that comparing this era to the pandemic era is really an apples to apples comparison. So that was kind of point number one and the first thing that I thought of. Point number two was just because your headcount is reducing, it doesn't mean that you're laying anybody off, right?
Literally, I'm
Like,
looking
like
at this paragraph on the screen right here,
yeah.
right?
And like
And
one of the things that I thought is like, oh, this actually makes sense. It just probably means that attrition is going back to the rate that it always was. Right? Like one of the things that we tell consulting candidates we work with is that you go into consulting to leave it. Right? You go build the skills, you get the experience, and then you leave for the amazing exit opportunities. And during the uncertainty of 2022 and 2023, when tech was laying off, when the markets were down, consulting was, an even kind of safer haven for folks than it usually would have been. And so we saw a decrease in attrition during those years because people didn't want to leave McKinsey. And I think now what you're seeing is that attrition is rising again, right back to where it was, before some of this market uncertainty. And that's one reason and one driver for the headcount reduction. It is McKinsey laying some people off? Maybe. Like one of the things that I've heard from the firm is that they are increasing the standards for like those who want to make it to their top performer bucket.
yep.
But that is a incredibly small part of the headcount reduction, right? They eliminated 1,400 back office roles. Like again, that's a small. They're not consultants, number one, and that's like a relatively small number given the size of the firm. And so I think
It
a
doesn't even say that
big
they were that those roles were filled. Like
yeah,
that's one of the crazy things about this. They could have literally been job postings that they just took down as
exactly.
a part of a restructuring plan, which just to me is a crazy misleading way to
So I
represent
think the biggest driver of this is actually increased attrition, and that's actually a normal feature of the consulting industry. And one of the signs to me that what I'm saying is true is because of the robust hiring plans that McKinsey has this summer for its kind of undergrad and MBA pipelines, right? Like all the signs we're seeing from the firmers that they're full speed ahead in terms of kind of entry level hiring at the undergrad level and the MBA level. And when I see that, that tells me that okay, your attrition is where you projected it to be. And B, your project pipeline is healthy enough to sustain that level of hiring. So, like you said at the beginning of the call, I think this is a nothing burger.
And I, kind of like as you dug into it, Naman, I think it's really important that people understand that McKinsey is at the top of the consulting food chain. So everybody always wants to write a story about how McKinsey is declining, right? Because that's the only interesting story. Saying that McKinsey won again is not a fun story to talk about. But hey, McKinsey is declining. McKinsey laid off 10% of their workforce. No, they didn't. They just didn't grow. They restructured a little bit of their back office, but literally between 45,000 at the end of 2023 to 40,000 today didn't come because they wrote 5,000 people an email yesterday. It came because they eliminated a few of these positions in 2023, right? 2,800 total. They increased their attrition. they focused on slowing hiring from the pandemic levels as well. And so there was natural attrition, not even just increased attrition, but natural attrition that they weren't backfilling. And so anybody who wants to write this story, I think is bogus. I think honestly, where people should be looking right now is BCG, because as you mentioned, Naman, the McKinsey hiring is robust. We've seen that they hired off cycle. We see that they posted their deadlines really early in the cycle. They are full speed ahead with their sophomore and freshman programs. They are like absolutely filling their hiring pipeline, and they're growing, exponentially. I think that this also doesn't reference where the cuts are happening, and so it's really important to understand that geographically there's challenges. BCG is crickets, and we're hearing that they are basically using their early pipelines, which they've already filled, and slowing down or maybe even cutting off some of the later pipelines for hiring. And that's, I think, a bigger concern about project growth. At least they're messaging that to the market. So I think this is just kind of a story that's important to write. Hopefully, we'll reach out to McKinsey today. Maybe we'll even get a comment from them to hear a little bit more about what's happening, what their plans are, and where their focus areas are. Because as with every other business, the story is never in the headline. The story is in the undersurface, right? Where is McKinsey growing? What practice areas are booming? Which geographies are going gangbusters, right? These are the things that we really want to focus on.
One of our theses, Jenny Ray, is that, consulting is the canary in the coal mine. Right? Like if you want to know what's happening in the economy at large, like 6 to 12 months down the road, look at where the growth in consulting is today. Can you talk a little bit more about that and why like this headline can be so damaging? Because we really do see consulting as like a leading indicator of what's going to happen in the broader economy.
Yeah, absolutely. So one thing that we found very interesting is that in all of our conversations with firms, and we have hundreds of firms that we work with through our rankings, through our panels, through the work that we do on the firm's recruiting side, through all of that, this whole spring, it's been like there has never been as good of a time for consulting as now. And this is a market opportunity that we haven't seen before because uncertainty usually drives consulting spend. But the downside is that if budgets are cut, if cash flows are constricted, not just future concerns about cash flows, but current cash flows are constrained, then there is a cut in consulting funding. And so the micro story actually from 2020, Naman, was that in the first quarter of 2020, when the pandemic news rolled out, consulting firms stalled almost to a standstill, right? There was a 0% hiring. In fact, we saw mass layoffs. I can't even remember one firm who brought on interns that summer. It
Hmm.
was dramatic, right? And we see it in the hiring because hiring represents the strength of the firm's pipelines because these firms don't just hire just in time. In fact, they almost never hire just in time. They hire a year in advance. So they're not just the canary of today's coal mine, they're the canary of tomorrow's coal mine too. And so anyhow, we saw that. Well, by the third quarter, every firm was desperate for talent because their consulting revenues had gone wild because every firm faced with uncertainty was investing in consulting services. The government had gone through its kind of supplemental plan for businesses, and so there wasn't a cash flow constraint like there was at the beginning. And so when people say 2020 hiring booms, it was a crater and then a boom, right? There was a micro story underneath that. And so I think what we're seeing at McKinsey is something similar. This is not, a 2-year trend. It's not that interesting for what's happening in tariffs and what happened in the US election in the fall. What's interesting is what's happening right now. And that's why we really track the job market because that's where we see a lot of the future confidence. And personally, we see it across almost every firm that we're working with. And so I'm really interested to see how that pans out. But right now, we're not seeing a constraint in consulting services. So this news is not just misleading about McKinsey, but it's damaging in terms of a thought about the broader industry, and it's trying to extract information that isn't there. If it was there, like we would go after it, by the way, right? We are not trying to protect anyone inside the space. The truth matters a lot, but this is not a true reading of what's going on in the industry slowdown. I don't think that's a very fair approximation of what's happening, and it doesn't speak to what's happening in the industry at large.
Yeah. And the practice areas in which you see growth concentrated are most likely the areas of growth in the economy over the next 6 to 12 to 18 months, right? So that's what we mean when we say consulting is the canary in the coal mine, kind of where you see companies engaging consulting firms today, those are their focus areas for growth. That's where they're paying attention. And so, keep following market outsiders because one of the things that we do is we give you a peek inside the private markets, right? Like McKinsey's not publicly traded.
Not at all.
Like there's no earnings report for you to look through. So, a lot of kind of what we talk about comes through the strength of our relationships and just some of the data that we gather from working with these firms year after year after year. So as you keep following market outsiders, we'll keep trying to bring you some of these leading indicators so you can be smarter than your peers in terms of what's happening in the broader economy. And you'll be getting those insights from a data set that's not readily available anywhere else.
Well, NVIDIA is reporting earnings just after the bell. They probably are doing it right now. I know that we're going to see the market respond to demand for AI. AI is considered kind of maybe one of the we were talking earlier. Was it last week, Naman, that you showed the chart around Bitcoin, right? Bitcoin was meant
Hmm.
anti-cyclical. AI is certainly considered to be potentially anti-cyclical right now. So amidst news from all the big retailers about tariffs or consumer uncertainty, AI is just a question of whether investments continue. Will NVIDIA beat earnings again? It's a different piece of the market that matters a lot to investors. So we'll have to, bring up a little bit, at least a snippet about that tomorrow.
100%. Yeah. It's a secular trend, I think, right?
That's
Like
right.
35% of the S&P 500 market cap is tech and new media, right? So like it's an outsized portion of the market.
Yep.
I'm really excited to see if Nvidia beats again. It seems impossible that they just are going to keep beating at the rate that they've been beating, but honestly, I've learned not to bet against them at this point.
So I'm excited to see it too. And there's a lot of interesting news today. Also, the minutes from the Fed's meeting come out. So even though we saw what the outcome of the Fed meeting, we didn't see the deliberation and the conversation that happened. So those minutes are going to be really insightful for a lot of people to understand some of the underlying issues. But overall, we see a lot of economic health. We see consulting firms hiring. We see in the private markets, improvement in deal activity. There's a lot that's happening that's really strong. We see employment being strong. So I think there's a lot of really encouraging signs about the markets and the economy in general. And we'll see if this news today bolsters that. So we'll see you back here, same time, same channel tomorrow. Happy birthday, Mom. Love you. And we'll see y'all tomorrow.